Per usual, living on this channel is for educational purposes only and is not intended as financial advice. It is Teaching Tech Tuesday. Let's take a look at one of the first written records of trading. That was in 1688. A young gun named Joseph de la Vega, traveler, merchant, writer, complex background, ended up in Amsterdam at the early days of the Amsterdam Stock Exchange. The reason anybody knows anything about this guy is because of a book he wrote. I'll get to that in a second. But I heard about this book a couple months ago. It's like, 60 pages. It's not very long. It's a difficult read. It's a tough read because it's translated. It's full of metaphors. It's kind of like a play, kind of like a journal. It's kind of all over the place. But what struck me was that he could have written this today. The exact same principles in trading could be applied today. The exact same types of people, euphoria, mania, amnesia, FOMO, fear, uncertainty, doubt, the way markets were traded back then and the way you'd have these sort of venture capital funded trips in the shipping lanes. It's very interesting. I think anybody who is in the markets at all would benefit from taking a look at this. Even if you don't read the book, just getting some background knowledge on what he had to say, because there's a reason we say certain things. Those of us who've been here for a minute in the markets, this was a little history and background on the Amsterdam Stock Exchange, which was, related to Dutch East India Company, which I think most people are familiar with. But this was before the United States existed. This was before any of the wars. It's just crazy how, again, it's so long ago, but literally if you read this today, you're like, oh yeah, I know this person, or I've seen that, or I felt that way. It just kind of goes to show you how nothing's changed. Nothing's changed in 300 years. It's all the same. Markets are people and people have not changed. I did notice a couple years ago, Sotheby's had the book for auction, and you can kind of see what it looks like. It's, I don't know if all the pages are translated, because like I said, the book itself is very, very short. So I think he actually wrote a bunch of short stories. It's just this one became the most famous. But the book itself ended up selling for, I think it was $300K. This was in 2018. So it did fetch a pretty penny. Some of those books still exist out there in original form, first print, first edition. Before I dive deep into some of the lessons of the confusion of confusions, which is a mouthful in and of itself, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Non-investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures, Inc., PBI, DBA, Kraken. And I think some of the trading vibes are kind of lost without being face-to-face, in-person, open outcry. You don't really get to know people directly. We know them through social media, obviously, and what people talk about and what they say, but I can only imagine, sitting down with somebody today who's doubling down on bearishness, seeing charts like this, or somebody who's on the short side getting underwater. I don't know. It's psychologically very interesting to see all that play out, obviously. Bitcoin doing very well today. Can't really say the same for much else per se. There's a few coins. Miners are doing well today. Against BTC, Uni up big. Okay, there's one coin up decently big today. But the way this is set up, it should, to me, continue to break out, even if we continue to range. It's been almost 100 days at this point, but as long as we set at the top of the range with strength, I like all-time highs easy within the next couple weeks, if not sooner. And Joseph would have only been so lucky to have been able to use something like Kraken Pro. So if we look at the book itself, if you've heard of this book, you'll probably have seen these 4 principles. This is probably the thing that gets most quoted of the book itself. So you got to remember he's sort of writing this as a journal, as a play. He's sort of describing the different types of people in the market, and he's giving his speculative principles that he tries to live by. First one's never give anybody any advice, which is hilarious. Basically saying you never know when it could go poorly. You never know when the advice could not go your way. Usually when someone either asks for advice or is given advice and that advice goes poorly, because of the way we are wired, we sort of blame the other person. It's not my fault. I did not have agency in that decision in taking that trade. It's easier to just blame the person giving you the advice. That's why it's always best to do your own research on anything, obviously. And always take caution when anybody's purposefully giving you advice. They're usually doing that for their own profit, their own gain. Second principle, take every gain without showing remorse about missed profits. Next trade, next trade, next trade. As the old adage goes, no one ever went broke taking profit. This sort of paralyzes a lot of people, especially in parabolic moves, especially in things like altcoins, where something is up hundreds of percent or tens of percent, and they can't acknowledge and recognize the fact that they're up and they're doing well. It's all about, I can't sell too soon. I can't miss on future gains. If I do, that will still be seen as a loss. And there's this weird loss aversion towards delusions of grandeur or something in the future, where it's like, look, this is why it's important to have a plan and execute that plan ahead of time. Similar to, drawing fibs on a chart. Why do I do this at all? It gives me some idea, as if I'm swing trading this or whatever, on where to think about taking profits, where to think about looking for resistance, looking for weakness, looking for divergences, stuff like that way ahead of time. So if this blows past 90, great, right? Have a plan for that. Have a plan for taking profit wherever on any specific trade. But you never can look back and say, oh man, I sold 3 BTC in 2015 for a Chromebook, which is a true story, right? I sure wish I had that BTC with me now instead of the Chromebook that no longer works. But such is life, You live and you learn. Third principle, profits on the exchange are the treasures of goblins. And I think with this one, he sort of means that he's sort of talking about volatility and hinting at one day you're up a lot, one day you're down a lot. And you sort of have to keep, he doesn't say this specifically here, but you sort of have to keep an even keel and come in with the expectation that, look, if you have a specific plan or a direction in mind, know where you're wrong, but realize along the way, things could get dicey. Things could go in any direction, right? On any given day, you could be up. Bitcoin and crypto is a perfect example of this. You could be up on any given day, down on any other day. And dating back to his time, thinking about, he talks a lot about in the book about the news from these expeditions that would go out, these venture capital missions, basically, where they'd report back in some news form that the journey's going well, it's not going well, and they'd be betting on that. And so I can imagine where it's like, oh, the ship's capsized or something, right? Like crazy stuff would happen on these journeys, on these trips. There'd be rumors, there'd be fake news, all sorts of stuff. So that, of course, could certainly affect the P&L. Fourth principle, whoever wishes to win in this game must have patience and money. So it's funny he calls it a game, first of all. Even at that time, right? I think many of us know that there's investors, there's gamblers, there's traders. Wall Street and institutions kind of make it this hoity-toity thing, but really at the end of the day, we are all professional gamblers. That's what we do. We think we have a direction and a viewpoint. We express that viewpoint, and we hope to make $1 more tomorrow than we had the day before. And this is as true then as it is today, right? Have patience, and you can't have no money. You have to go in with a little bit of something. And he's hinting at kind of being an investor rather than a trader or a gambler. At least that's my read. Taking it slow. And I think in the book, by acknowledging the different types of people, he sort of throws some shade on the less savvy gamblers and traders. And I think from his knowledge, I don't know if he was actually a good trader or not. I don't think that's actually ever revealed. But eventually you come to learn that you do certainly have to have a little bit of patience with trading. Definitely goes a long way. Some other quick notes. Like I said, he describes the people a lot, and he describes how they're trading and what they're trading and what their goals are and what he tends to see in them, like the psychology of these people. And even now, right, we've got the whales, the traders, the investors, and then the straight up gamblers, right? So nothing has changed. Literally nothing. Exact same thing we are seeing today is what he witnessed based on his own account in 1688. Another one I thought was really, really interesting. He goes on to describe, I think it's the South Sea bubble towards the end. And he's basically saying, because you're not getting paid for holding cash, like the rates were too low, this pushed you into stocks rather than money, rather than loaning your money. This pushed you into risk out of risk off. Where have we heard that before, right? The zero interest rate policies. The TINA environment, there is nothing else environment that we just lived through, promotes venture capital. It promotes risk-taking behaviors because there's kind of nothing else to do with your money, right? So it's like, okay, I can either get X amount, which may or may not have been the inflation rate at that time. I don't know what the real rate was in 1688 in Amsterdam, but without some sort of yield, it makes a lot more sense to put your money to work in something as an investment than watch it get inflated away or something else, right? Just another little nugget that has persisted over the years. So I'll put all these links in the description of the video. And then lastly, since we're talking about history of markets and technical analysis, and I talked about futures last week, this individual, not going to butcher their name, Honma, rice merchant who traded in the rice exchange, father of candlestick charts, which then went on to candlestick patterns and chart patterns and all sorts of technical analysis that we have learned to know and love, right? Along with futures markets, which is just like another, mind blown. Let's use a coupon for promising you delivery of rice at a future time. And it's just interesting to read about things that, as somebody who's sort of newer to finance and doesn't have a financial background, right? Coming and reading this stuff and realizing nothing is new, nothing has changed, right? He even has his own little contrarian nugget here. When all are bearish, there is cause for prices to rise. And so that's partly why I think we're seeing rises in Bitcoin. We just still have a lot of people who are of the viewpoint that this is worthless, it shouldn't be here. Why do the ETFs exist? And we still have people, even in crypto, who are pretty bearish what's going on here. So anyway, thought that was interesting. Definitely give the book a gander, should it interest you. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.